Kia ora koutou and welcome to Markets, Mystics and Mayhem, a weekly podcast with Kiwibank's economics team alongside the occasional special guest. We'll delve into the data, decipher policy decisions, monitor the markets, and analyse the issues impacting the Kiwi economy. Let's get into it.
Kia ora koutou and welcome to episode 12, where we're going to talk about commercial property and a lot of the tectonic shifts that we're seeing that are structural in nature, but also some cyclical swings as well. We've asked Sabrina to do the research, so we're going to be quizzing her on what's happening in the commercial property space and what we can expect. Sabrina?
Yeah.
Commercial property
today.
You absolutely. This is an interrogation.
Yeah. So right in front of the camera, everyone look at JK's elbow pads while they're in shot. But yeah, commercial property. Well, I guess we should probably start off with defining what actually is commercial property. Off the top of my head, I think, well, it's everything that's not residential, but that probably means nothing to you. So think things like you've got your retail space, so your shops, your restaurants, then you've got your offices, and then it even branches out into sort of the industrial space, which is things like your factories and your warehouses, things like that. So that's commercial property. What have we been seeing in commercial property? Well, much like the housing market, we've seen a bit of a downturn recently. So leading into sort of 2021, commercial property was doing quite great. It was quite booming, sort of the next hot thing. And then COVID happened and interest rates happened. And then we kind of saw commercial property prices start to fall. We were getting, before that, gains of about 15, almost 20%. And then at their lowest, they fell 10%. So quite some big moves for these expensive properties. And again, like the housing market, a lot of it was interest rate driven. So obviously inflation was ticking up. The Reserve Bank had their heavy-handed hikes out. And that was hurting investors. It was hurting businesses. We saw vacancies rise. But the story around commercial property, yes, interest rates have played a role, but actually it goes a bit further. And that has to do with, as you mentioned, some of these sort of behavioural shifts that we're starting to see for commercial property, a lot of which have come from COVID, from the pandemic, things that have stuck around. So the first thing that comes to mind, which you might be thinking of, is working from home and how that's changed the space for offices. So, for example, Jarrod, I mean, when you're not traveling around the country, I don't also always see you in the office because you've got a great setup at home, right?
Yeah, absolutely. So I guess, to unpack that, we'll go through the tectonic shifts and the big structural change. I think the first most important one is working from home. So, for me, I do a lot more webinars and presentations to clients online these days, whereas I would have done a lot more in person prior to COVID. So that's the way I work, or we work, has definitely changed on that front. Plus, Kiwibank is a B Corp, and that means we travel less. We definitely fly a lot less. So we're also being forced more online in this world. So working from home, but also doing a lot more online, has changed the demand for office space, yeah?
We had people having sort of a choice to work from home, and now it's kind of like people's right. They want to be able to work from home. So if you're going to convince them to come into the office, we're really starting to see this shift for primary up-class office spaces as opposed to sort of what we class as secondary office spaces. So we're seeing that in vacancy rates, and we're also seeing that in terms of the rental indices. So offices in the prime category, whether that's better amenities, better location, they have less vacancies, better rents, whereas the secondary market's not doing as well.
Yeah, I think this whole more hybrid working environment has led to this flight for quality, which we've been seeing. And I think it's for the better to have this kind of, I don't know, when you're working on like a big project or you're doing something, sometimes it's good to kind of be in your own little space, and sometimes at home is that kind of provides that for you. So you do all your big stuff at home, but to get people to come back into the office, which again has its benefits, being more, you can have these sort of hallway conversations. You just have to, offer and provide these amenities, these sort of collaborative spaces, nice kitchens, all these things is what we're seeing in terms of the demand for the type of office now.
And just take Kiwibank for an example, right? So this building is just beautiful, right? We've got great open spaces. There's lots of areas to work. There's little pods that you can jump into if you need a bit of quiet time or you need to focus. It's just a beautiful building, right? Think about the Kiwibank building we had a few years ago. It was just an old NZ Post building, and by God, it was miserable in comparison to this place. So there's a classic example. A lot of Kiwibankers working from home and coming in here and really enjoying the space when they're here. And so much better. So this is A grade by far, so much better than the building we were, which was B, possibly C grade, right?
Yeah. But I think leading on to more people working from home, yes, we still come into the office now and then. That's also having flow-on effects to other parts of the economy. MJ, do you want to touch on that a bit?
Yeah, I mean, with more people kind of working from home, Mondays and Fridays are very quiet. And with that, there's less foot traffic in the city. It doesn't matter where you walk Queen Street, it's very quiet. And that obviously hurts the retail and hospitality sector. So where there are benefits in terms of productivity for workers around working from home, there is, these negative sort of unintended consequences for the hospitality sector with less foot traffic.
Although I would argue, yes, the people in the businesses in the CBD are struggling because people don't turn up on a Monday and a Friday and, less foot traffic during the week. But you know what? The coffee shops in the suburbs would be arguing the other way around. Actually, they're doing it better. They're getting more people during the week than they had before. So it's kind of, it's one of these things, adapt or die.
Yeah. But if you're in the city and you walk down Queen Street, that's dead, right?
Dead.
And that's impacted sort of the retail spaces that we have in the city. Vacancies are up quite a lot in the retail space in general, and it's not just because of this foot traffic. It's also because coming out of the pandemic and coming out of COVID, we learned how to shop online. I mean, of course, shopping online was a thing before COVID, but not to the same scale that it is today. And we love to do it now. And it's great. It's a great time saver, quite efficient, but there has been this big shift out of if people can do it online, they're going to do it online. And that means less demand for these retail spaces.
Yeah, so online activities exploded post-COVID. So we were on a trajectory where retailing was going more and more online. E-commerce was growing, before COVID. And then COVID hit, and we basically had 5 years worth of growth compacted into about 6 months. And that 6 month sort of COVID period, if you were a retailer and you didn't have a website, you suddenly found yourself in the dark ages. And if you did have a website, it exploded, and it took off, right? And that won't change. That's a structural shift.
Yeah, I think that is the reason why we had such a strong economy, much stronger than we expected during that time, because lots of businesses went online, whether they created an online presence or they boosted their online presence. They kept sales going even though their doors were shut. So I think that was, and I like it especially because now it does open up the world for them, because, their consumers don't just have to be New Zealanders in person now. They can be New Zealanders online, but also a more global reach, which again just is good for the economy. But that is one of the big reasons why we had such a strong economy, with that online presence really boosting us.
Yeah, exactly. So a online retailer based in Wellington is also the Auckland, Christchurch and international market they can tap into now. So they've just broadened their horizons for the better.
Yeah, it's not going to go away.
Yeah. But I guess if you can imagine, if you're a commercial property investor and all of a sudden all your clients are saying, actually, you don't need the shop anymore, I'm just going to do this from home, going to get a warehouse instead, then you might start to worry, and that's what we've kind of been hearing and seeing. But to that point, while this is sort of a bit of a headwind for the retail property sector, it's actually a bit more of a tailwind for the industrial sector when you look at specifically warehousing, because now with sort of online shopping growing, it's more about just having a warehouse stock space. And we've actually seen that the sort of industrial sector led by warehousing is actually growing the fastest out of the sectors and actually outperforming retail and offices purely because of the sort of demand shift. And then on top of that, now this is what I find is really funny, is that, so you know how we have a housing shortage? Well, we also have a commercial property shortage, specifically for the industrial sector, because that's the one that takes the most amount of land mass and land availability. And we know we live in New Zealand, it's really hard to get resource consent. So we actually have quite a bit of a shortage in this sort of space. And that's actually helped, ironically, to buffer the sort of fall that the downturn that commercial property has had of recently, which is actually, I just think it's so funny because we always talk about how, you know, the shortages that we have in New Zealand is like the bane of our existence. And in this case, it's kind of cushioned the fall. And because of that, sort of rental prices for the industrial sort of sector and commercial property have actually performed quite well and have a bit of a optimistic future ahead of them.
It really depends on where you are too. Like what you were saying is so true. You know, the need to build these massive warehouses, also data storage type areas as well, is growing and growing and growing, and we're seeing that out towards, you know, the airport. We're also seeing, you know, these larger physically sized retailers, you know, clustering and getting together. Particularly in West Auckland's a classic example. We've got, you know, you've got all those large retailers. What's that one I'm trying to think of? Costco and these others coming in here. They are massive and they take large footprints. They're also sucking consumers away from Queen Street and these more traditional retailers into these massive mega malls or whatever you want to call them. So there's a lot of things changing here, and you know, you're either doing it online or you go to one place where it's just a massive park full of you know, the big retailers. The little ones are getting hurt.
So this is commercial property, I guess, on a national basis. Are we seeing any you know, differences across the regions? Is commercial property more favoured in some of the regions? I suspect down south, just like the housing market we've seen, kind of down south is where the place to be for this.
Yeah, you're completely right. So it's quite funny. Christchurch seems to be the place to be for housing, for business, for commercial property as well. And again, it comes down to the supply and demand balance that they have. So post-earthquakes, they've been able to rebuild at a sort of rate and level that better suits demand. So actually, there they've been performing pretty stable there. They've had less of a downturn and just kept more stable compared to here in Auckland, where we've had this much bigger downturn and then at the same time have a much sort of imbalance between demand and supply. And then looking at Wellington, it's a bit more mixed down there, given a lot of the sort of demand for those commercial properties is driven by government, and government spending changes quite frequently. So the demand is quite shifted from every 3 years, I guess, as public spending comes on and off.
I guess there was a brief overview of commercial property. As we understand it, there's a cyclical and structural component to it. You know, as interest rates head lower, that should see the sector kind of bounce back and recover just like the general economy. But also there are some structural shifts in play that have resulted from COVID, whether that's working from home or more online retailing. So it's going to be very mixed, I suppose. The sectors within, you know, beneath commercial property face very different futures. For office space, there would be this flight for quality. If we're talking about retailing, there'll always be a demand for an in-person store experience. So they'll still have some demand there, but we are seeing this move to online, which would mean it should be a tailwind for industrial space, warehousing that need just to hold stock. So it's going to be very different and mixed futures for within commercial property, but we'll continue to be looking out and seeing what's playing here.
And if you like today's episode, we'll also be going into more of a deep dive in a written note in a couple of weeks. So check that one out. But that's it for the episode itself. Make sure to follow along, subscribe, and like it if you can, and we'll see you next week.
You've been tuned into This is Kiwi Economics, Markets, Mystics and Mayhem. We'll be back next week for more analysis and insights.